Hi, Andrew Cooper here from Advice for Living Financial Planning in Diamond Creek. Wanted to give an update as we get towards the end of the financial year. In particular, regarding the end of the financial year, two things to note. One is for people that are still contributing to superannuation, you've got obviously until the end of the month to get your contributions in, but you should make sure you do it early. It's important to remember that your contribution counts not when it leaves your bank account, but when it hits the superannuation fund. So you shouldn't leave it until the last day or last couple of days. If you're planning to make a contribution, then I would do it as soon as possible. Remember the contribution limits. So salary sacrifice or deductible contributions, or concessionals as we call them, you're limited to $25,000 for the financial year, and that includes any money that your employer may have put in. So be careful with those contribution limits. If you've got any concerns about it, then give us a call and we're happy to help. You can also make, of course, after-tax contributions. They're called non-concessional contributions, and your limit is $100,000 per year with those concessional contributions. Or if you do have a large lump sum, you can bring forward the next 2 years of contributions. So you can actually get $300,000 in one go, but it does mean that for the next 2 years you can't make any contributions. So important thing is, if you're going to contribute before the end of the financial year, then do it as soon as possible. Often you'll find the super funds will actually have a cut-off maybe as much as a week before the end of the financial year, just to make sure they process the transactions. So that's the first point. The second one is also to do with contributing to super, is that as from the 1st of July, so when the new financial year starts, there is available now for older people what's called a Downsizer Super Contribution allowance. And what that means is, if you are 65 or over and you've owned your principal residence for at least 10 years and you sell that principal residence, so your own home, you can contribute as much as $300,000 per person from the sale proceeds into superannuation, regardless of any of the other caps. So it's a separate contribution cap, and so it can be useful, I'd say, for some people to be able to top up super if they don't have a lot. Now, it doesn't require you to buy another house. As long as you've sold your house, you can, as I say, contribute up to $300,000 per person. So if there's a couple, you can contribute up to $600,000 into your superannuation. Important to remember, of course, that $600,000, if you are on age pension, that $600,000 will count as an asset, and so it could affect your age pension, where, of course, if you spend all of the money putting it back into a new home, then it doesn't count. Because the house is not accessible. But for people who are looking for the opportunity to top up their super, then I think it offers some great opportunities. So again, if you've got any questions about how that downsizer arrangement works, then please let me know. The other issue is the Royal Commission into Financial Services has probably gone a little bit quiet at the moment. They're having a little bit of a break. They've gone through financial planning and also had a lot to do with loans. I suppose from what I've seen of the Royal Commission, my thoughts would be there'll be some changes to how things work when the recommendations come out. My expectations would be that loans will be more difficult to get, and there will be more stringent requirements, particularly with some of the numbers that mortgage brokers are putting forward as part of the loan. So what estimates of living expenses and all that sort of stuff, that's really where there's been some problems with the loans. And so I'd expect it's going to be, if you're looking to get a loan, I'd expect the process is going to be a little more stringent. In the financial planning area, for us here at Advice for Living, there will be, I would expect, no change. There might be, I don't know, there might be a few more forms to fill out or something, I don't know. But the change will come in the bank area. Already, a number of the banks are selling off their investment arms insurance arms, and some of their financial planning businesses. I would expect that the banks in general will go back to being ordinary banks. The Royal Commission has been very critical of the conflict of interest with financial planners employed by banks recommending bank products. It's just not in people's best interest, and I know many of you have come from that environment, and we've sorted stuff out for you. At Australian Unity, that won't be an issue, of course, because Australian Unity doesn't, apart from a couple of very minor funds that most of which we don't use, there's very little impact. So you won't, so we're not recommending, there's no in-house products to recommend. So as I said, I don't expect that will have anything to do with us. And I suppose the last thing is just generally markets. Share markets around the world are generally performing pretty well. Europe and Asia have done particularly well. America is a little bit cautious based on the North Korean business. The Australian market's been generally okay. I suppose fixed interest is generally creeping up a little bit, so interest rates are going to go up. You won't see that pretty much in home loans for quite a while, but in terms of what we call fixed interest, so that's bonds and so forth, those returns are gradually coming up. The one disappointment has been commercial property, and its returns have been lower. It looks like in the longer term, property will become what we call a bond proxy. So it'll be a sort of a fairly steady, not terribly volatile, sort of low return sort of investment. So what we'll be doing as we go through people's reviews is we'll be looking to adjust a bit so that we put any property allocations will be on the defensive side of the ledger rather than on the growth side of the ledger, and I think that'll make an impact on the sort of returns that people get. So anyway, that's I can see I've just gone over 7 minutes, and that's far too long for anybody to listen to me. So again, any issues, any questions, any concerns, do please give us a call. If you think anybody may be interested in listening to what I've had to say, then please send it on. Of course, we work by referral. We appreciate referrals of business, so please feel free to send it on to anyone who you think may find it interesting. And as I said, give us a call if there's anything we can help with.